GM, everybody, welcome back to the channel. Today is Thursday, the 30th of January. Let's get straight into the analysis and we'll start off with Bitcoin. So, we had the big man speaking yesterday, Jerome Powell, and he was actually very, very bullish, in my opinion, is the way I interpreted the language he used. He talked about obviously still making progress towards their inflation target of 2%. Obviously, interest rates got held at current rates. There was no change on the interest rates at 4.25 to 4.5%. We expected that, we knew that. But what was really important was his language in the press conference, and he didn't really respond to intervention in terms of Trump intervening, but he didn't actually come back with a very frosty response to kind of say, well, that's none of Trump's business or anything derogatory, anything hostile. It seems like the Fed want to work with the government. There's still going to be a reduction of the Fed's balance sheet. So this is obviously seen as quantitative tightening. Obviously, if the Fed are removing assets from the balance sheet, they're actually selling those assets into the market. Obviously, quantitative easing is when they start purchasing those assets. So we didn't see any mention of that change or that shift. But what this does is it really just kicks that can down the road until March when the next meeting is. And potentially at that point, they then reassess the data. If inflation's coming down, if we're seeing any weakening in the jobs data or the jobs market at all, then you best believe there will likely be a policy shift at some point, either a ending of quantitative tightening or looking to reduce the interest rate. Those are the measures at the Fed's disposal. Obviously, at the moment, they're keeping interest rates, in Powell's own words, restrictive. And obviously, that means it's above a neutral level where they feel those rates are neither restrictive nor unrestrictive. So that does imply that at some point they want to bring rates down to being non-restrictive levels, which would imply bringing rates down lower. So I think we've got a lot there to be optimistic about. And obviously, to think that if some of these actions and policies that Trump's put in place to lower inflation in the US, if those are successful, we've got sort of 2 months to the next meeting. Potentially, if over the next 2 months we see CPI or PPI stall, or even better, have an actual downtick, then that could lead to us getting a rate cut in March, or potentially at the meeting afterwards. I'm not sure if it's April or May, but the meeting after March. So I mean, the market's going to know this. The market's forward looking. It's always looking what's going to happen 3 to 6 months in the future. And I think based on the meeting yesterday, we could tell that, okay, rates are restrictive right now. At some point in the future, they will probably come down. He was also asked about Bitcoin, and he talked about the banks being able to custody Bitcoin as being, a good thing for consumers due to the protections offered by the banks. And ultimately, that he talked about investment fact sheets and forms, and ultimately, if the consumer is well informed about these investments, then he doesn't see a problem. He definitely had nothing to say whatsoever about Bitcoin or about cryptocurrency, which was really, really positive. Bitcoin really caught a bid after that question, which was the last question of the press conference. So, long story short, we've got the green light, I think, now on the macro to really push on higher. And obviously, as we can see, getting into the price today, we can see we are above this descending trend line. So, Bitcoin looking to break out through this. We actually broke out on the 4 hour. What I really want to see today is for us to hold this 105,000 level on a daily close. I think closes anywhere above where we currently are for today would be a fantastic daily close. Obviously, in terms of the daily chart, that would confirm the breakout from this descending trend line on a daily basis. If we can then get another close on Friday, which is positive and above this candle, then I really, really can't see us not coming back up to around 108 to 109,000 and retesting all-time highs. So yeah, pretty good stuff as far as I can tell. And the market's obviously reacted the right way. If we look at the liquidation heat map, so this is looking at the past week, so this is capturing everything over the last week in terms of liquidations. You can see really there's not a lot below price. Yes, there's a little bit here. If market makers do want to run us down towards the open, maybe below 105,000, catch a little bit, but really the larger liquidations are all above price. Obviously, bulls have been taking a bit of a hammering over the last week, and we can see most of the liquidations have been taken out on the long side, and now we're looking to take out these liquidations on the short side. These bears that are expecting lower prices, that are maybe targeting your lower 90,000s, they are in danger of getting liquidated, and this is obviously going to put some upwards pressure on the price. And without a doubt, we could definitely run through those. I mean, we've got sort of like a high tick here around about 107.2 up to around about 108,000. So we could look to run up to 108,000 again. I feel over the next few days. I don't really see why this market would wait around, but of course, I think there's still those people that are thinking this is a high. Obviously, this is resistance until it's not. So you might get some profit taking around 107, 108,000, which coincides with that liquidity getting taken out. So potentially that could be a place that the market stalls and looks to then pull back from, maybe for one more move lower, one more sort of liquidation move just to wipe out any excited longs that get trapped up here thinking we're about to break out. Then we see maybe this move actually play out into February, and we actually get that expansion happening in February. I really do think February is lining up to be a really good month for Bitcoin. If we look at the monthly chart, so just kind of zooming out a bit, we can see here we've got a nice bullish candle on the month so far. So, like I say, closes anywhere 105,000 above. I mean, as long as we're really above this sort of 102, 103,000, that's going to be constructive. But even better if we can close above 105,000. Just looking at the weekly looking really good. Obviously, back testing this broken trend line, starting to push on up and really starting to follow our path higher. So I like to think we're calling this market really well here at the moment. We seem to have a good grip in terms of what's going on. I think the one area that is still a bit frustrating and a bit uncertain is what's happening with altcoins, what's happening with Ethereum. When is Ethereum going to start to move? A lot of frustration because people are heavily positioned in altcoins, and I get it. I think this is really a reminder for anybody that's fairly new to the markets. Maybe this is your first cycle, maybe this is your second cycle, and you got in when altcoins taken off. This is really a reminder of how important it is to have a large allocation to Bitcoin. Remember, Bitcoin is the first mover, is the most dominant cryptocurrency, and without Bitcoin going higher, altcoins are not doing anything or going anywhere. So really, if you want to support your alts going parabolic, you really want to be investing in Bitcoin too, getting Bitcoin up higher. And that is what is then eventually going to send the altcoins when we see that rotation. And a lot of people are starting to say maybe we don't see the rotation this time. This time is different. It's going to be a Bitcoin only cycle, a Bitcoin super cycle. Alts are just going to waste away. Look, let's in the last 8 years or the last two cycles, we have seen absolutely no evidence of that relationship breaking down in the final bullish year. Usually, at least in the last two times, in 2017 and 2021, we saw altcoins outperform Bitcoin massively in that final year, the post-halving year. We're in the post-halving year now. What I believe is we are just seeing altcoins really go through a depression phase. It's almost like alts are in a bull market, Bitcoin's in a bear market. Alts are in a bear market with Bitcoin being in a bull market. People can't really seem to work out what the hell's going on. But let me tell you, this is nothing unusual. It's nothing strange. If we go to Bitcoin dominance, just for me to illustrate this point a bit better, and if we actually go back to, let's go on a weekly and actually go back to 2021, then look at what we did here. Okay. Look at what we did in, let's move this out of the way. Look at what we did in 2021. Okay. Obviously, 2020 was really bullish. We did sell off right at the start of 2021. We consolidated and then we had a complete and absolute meltdown, really starting from around March. It was sort of March, April time that we really, really started to accelerate lower. Okay, this time we've seen a more muted reaction. So we've kind of got this first reaction. Okay, it's not as big, it's not as apparent, but it is still there. We still had that initial impulse, that initial reaction. And now what we're looking for is Bitcoin to retrace higher and then Bitcoin dominance, sorry, to actually really, really come off aggressively over the next few months and really into, I mean, this move pretty much happened from the start of April all the way into early May. So what potentially we're going to see here, I'm going to redraw this path right now because it is less relevant. I think this one we can just really potentially sort of move over. So we've seen this push up. Actually, I'm going to redraw that too. So look, this is where we are. Let's go on to a daily and let's put a path on here in terms of what's expected over the next few months. So you can see we are seeing rejection today. I think, again, I was saying, as long as this high is not taken out, we don't have too much to worry about. If we take this high out and go above 60%, then yes, that would be more concerning. But I think we're at the stage where we are seeing a complete altcoin capitulation. And what I'm looking for here is probably over February, some sort of chop and things start to break down into a downtrend for Bitcoin dominance, probably going into March and then further down into April, May time. This is maybe a little bit aggressive, but what I'm looking for is actually a move down here. Let's just close that off. So I'm looking for something like this. Maybe it plays out. Maybe it plays out a little bit differently. I mean, this is probably going to see a bit more volatility than what we've got here. Of course, it's not going to be to scale. It's not going to be plain sailing. But I do think at some point we probably backtest this trend line, and at some point we'd probably go through it, and that'll be your alt season. And yeah, this is what I'm expecting. This is really, really what I'm expecting. Of course, people are going to get excited on these drops. They'll then get sort of worried and panicky when Bitcoin dominance is coming back up. But I think we will start to see breakdown. And yeah, I mean, maybe let's just move that across more. Maybe this runs on a little bit longer, but I think when we actually see this, so it's going to be a breakdown of this low and this trend line. That is when we should start to see acceleration in this, and we could move down very quickly. And I think we come down probably to somewhere just below 50%. So that is what I'm expecting on Bitcoin dominance. And yeah, it's hard to see another path here. Of course, can we do this? Can we come higher? Of course we can. Anything can happen in these markets. But I just feel that the sentiment is so, so negative right now around altcoins, especially Ethereum. It can't get any more beaten up. You're reaching the extremes, and it's these extremes where markets tend to go the other way. When everybody's looking one way, they tend to sort of pull the rug and go the other way. And yeah, I'm I'm sticking to my thesis. I'm sticking to my thesis that I do believe Bitcoin dominance will fall over the course of 2025. And I truly believe that this move starts now, that we really, really start to see this breaking down over the next couple of months with a full breakdown probably going into the middle of this year and into sort of May, June time. So yeah, let's see what happens. Obviously, I've elaborated quite a bit on Bitcoin dominance today. So yeah, it's good to get that analysis done. Trading view going painfully slow as always. And the first thing I need to buy when I do actually make some money from some of these tokens is is a new laptop. But you can see tether dominance coming down below 4% again, which is good to see. I've seen some other traders kind of draw a slightly different sort of trend line, a little bit more like this, and sort of do this as more of a triangle. So we can actually, I mean, we can actually visualize that on here to something like that. So obviously, if we do lose this aggressive sloping trend line, I'd expect us to hold this sort of less aggressive trend line and eventually see some breakdown. And that breakdown probably comes in, sort of February time, I'd guess. I guess between sort of now and the middle of March. These things normally break down around about sort of between 70-80% towards the apex. So that window would be in February time. I don't see why this market would hang around, beyond March to actually sort of roll over, assuming that we're bullish on Bitcoin and for Bitcoin to break out over the next few weeks. I don't see us having to, hang around these levels too much longer. But of course, we might see another push up in this. So we could do something like this, and then see this breakdown going into March. Or of course, this might happen a bit more aggressively, and actually, we've already seen this push up, and we're going to come down in February time. So we'll be a little bit more cautious for now, but that's why I'm expecting on USDT, so tether dominance. If we also take a quick look at Ethereum then, so obviously Ethereum, bit of a channel favorite right now in terms of a trade. I've talked a lot about this and how I think Ethereum will have a bullish Q1, and I'm not in a position to deviate away from that view whatsoever right now. I've got very, very high conviction that the next move for Ethereum will be to break out of this descending trend line. It might not happen today, obviously putting on a really nice bounce today, but it could happen by the end of this week. Of course, we might come down, touch this resist support one more time, which would be around 3,100. But I think we've probably done enough here to shake this market out. And yeah, I think everyone is that was going to capitulate on Ethereum is pretty much capitulating on Ethereum. I mean, if you're trading Ethereum here, you don't want to have any liquidation, any stops really anywhere above this 2,900. So unless we get one more very, very aggressive liquidation event, capitulation sort of down here, and we kind of see this happen, then again, this is me being very, very cautious here. This is the most sort of cautious I can be. I think this is worst case scenario, if you'd call it that. We're going to chop around a bit more and not see a breakout until later in February. Obviously, that would coincide with the path that I've just drawn on tether dominance to kind of see this sort of breaking out or breaking down, shall we say, happening later on in February, and of course Bitcoin dominance as well starting to come down. And yeah, I mean, if this we're going into March for an actual like full on breakout in Ethereum, potentially towards the end of February, Ethereum has got back to 4K, consolidates, and then starts to run. So I kind of like how those paths line up right now. But I hope we don't have to sit through this. I really do hope that we do get carried higher. And just from a fundamental perspective, I don't see any reason why we would hang around here. I think potentially, we see more of an accelerated breakout. The same with the breakdown on US Tether dominance as well, and Bitcoin dominance. So that's Ethereum. Patience. Patience is the name of the game. Solana getting a nice bounce. It's held its 20-day moving average. Really nice bounce today back above this level. We talked about this 234.7 level and starting to push on. And certainly if we take out this wick from Tuesday and can start trading above there, getting ourselves back in this sort of higher range here above the sort of 245 level, then we should start to look really good. Obviously, this is very constructive for Solana, and I'm still thinking Solana over the rest of Q1, probably into Q2, sees higher prices. And as I've spoke about, first target would be $322. The next target coming in around $417. So those are the targets on Solana. And like I say, I've been saying this for the last couple of weeks. Buy on dips, and hopefully some of you have taken that advice, because if you bought on this dip down to this level, this moving average, then you're probably sitting pretty right now. Of course, this can come a little bit lower, down to around 215, between 205 and 215. I think anywhere in here is going to be sort of a decent buy zone if Solana does retrace a bit lower. But it might not happen. And like I say, part of me says I've had enough of waiting for moves to happen. Let's just get on and see them. Let's see this market really come to life, because it's been a long time since we've seen that happen. The sort of full-blown alt season, the parabolic moves when everything starts to rip higher, and you get 100, 200, 300% moves in the space of a week on multiple large cap crypto assets. It's quite a thing to witness and be a part of. So I really think those times are not too far away. Pepe here came below the 200-day moving average, probably liquidated a lot of positions. It's currently front running the 0.786 on the Fibonacci. So and it's reclaimed this level that I said was a significant sort of demand zone. So look, will be good if Pepe can push back above its 200-day moving average. Seeing this as a deviation, I think from there, Pepe again coming in to break out from this descending trend line, similar to Ethereum with its descending trend line. Pepe obviously a little bit further behind right now, but it'll definitely catch up quickly if and when Ethereum starts to get moving. So all good for now. Markets looking fairly good here. Dollar seems to be stalling. So do we see the US dollar start to roll over a bit from here? Obviously, fairly muted reaction to yesterday's FOMC. We usually see some really big moves in the dollar, but looks to be forming a little bit of a toppy tail sort of from today, similar to yesterday and the day before. So potentially we do see the dollar come down a bit more, which will be another tick in the box for Bitcoin breaking out. Nasdaq as well, trading up today. Pretty nice reaction also from FOMC. So I'll be looking over the next couple of days for the Nasdaq to fill in this gap and potentially run on higher to new all-time highs. It seems like it is shaken off a lot of the DeepSeek FUD. Apparently DeepSeek have 5,000 NVIDIA chips in addition to NVIDIA GPUs that they're using. Apparently those chips cost a lot of money, like many billions. And it kind of throws some dirt on the claims that they developed this for $1 million or $6 million, a bunch of guys sat in a room. It looks like the actual investment was well into the billions, and the performance is not too good either. I know that the website was crashing and people were struggling to use it. So, yeah, I think the markets will shrug that off. The S&P as well. I think will likely rise as well over the next few sessions, looking really good to me above all of its long-term moving averages, breaking out from this descending trend line, similar to what we've seen on the Nasdaq as well. Similar price action. Nasdaq now above all of its moving averages on the daily too. So yeah, things are looking good. I'm don't really have too much else to say, but if you've managed to hold through the last sort of week or even the last couple of months, congratulations. You're surviving. You're riding the market, the bull market, which definitely comes with its twists and turns and plenty of bumps and plenty of shakeouts and very sort of scary, volatile moves. Bull markets are not immune from things to worry about or things to make you nervous or things to shake you out. And part of investing and making money in the bull market really is just staying the course, just staying locked in, staying focused, not getting shaken out, recognizing when information that's been floated out in the news and the headlines is noise, and being able to differentiate that noise from what really, really matters. Things like interest rates, things like inflation, actual macro drivers that are going to influence policy and obviously move us closer towards more easing policy, more expansive policy, away from this contraction, this tightening policy, which we've seen ever since COVID, and we seem to be on the tail part of it. I think this, tightening cycle is really on its last legs, and that's why the market is starting to move higher in anticipation. We're seeing the dollar start to come down. We're seeing stock markets get to new all-time highs. We're seeing Bitcoin at new all-time highs. The market is ready for us to go full turbo send higher over the rest of 2025, and I do think it will happen. Probably we see the biggest moves of this bull market later on this year now, and we see some sort of steady markup over the next few months. And then once we see more factors, more fundamental drivers sort of click into place around interest rates coming down further, around pivoting back to quantitative easing, I do think that is when we will see the complete euphoria, that sort of mass excitement, and likely that will lead us to putting in a cycle top in these markets. But we are not even close to that yet. So, like I say, remaining bullish for now. Want to see Bitcoin close today above 105,000. Expect some sort of volatility over the next couple of hours going into the US market open. Obviously, Bitcoin will be led by correlation in stocks, but everything risk on is looking good to me here. And yeah, I think new all-time highs are probably coming sooner rather than later. I would expect those within the next month, without any doubt, for Bitcoin. And I do think the altcoins will start to wake up soon. Obviously, Bitcoin dominance coming down today. Let's see if that weakness in Bitcoin dominance, if that relative strength in altcoins can be sustained, and we can finally, hopefully, get an alt season over the next month or two. So I'm going to wrap it up there. Thank you very much for watching. If you are interested in playing the alt season the way I am, which is having a large exposure to things like Ethereum, Solana, but also to meme coins, and specifically where I believe is the retail chain of this cycle, the home of retail, the home of speculation for retail, which is on Solana. I have done a video on Solana meme coins, which I've put out yesterday. I've built a portfolio. I've put in $10,000 of USDC into Solana meme coins, and I'm targeting a 10x on that account to turn that into 100,000 by the end of this year. So if you want to follow me on that journey, please do check out that video. It was the last video done before this on my channel, so go and check that out. I'll be doing regular updates on that portfolio over the next few weeks and months. And yeah, have a great day, and I'll talk to you all on the next one. GM, GM, GM.